All right, then, it's a good afternoon again. Of course, the market picture certainly of keen interest then to what is happening around the world. The big key thing has been the manufacturing data out of the rest of the world, which has certainly been quite interesting. Of course, today being the first working day of February does mean that markets will certainly look towards that manufacturing data. We saw a lot of green out in Asia, even the Hang Seng going up 2.15% in fact today, so a positive day there. Green board even out in Europe then, more than 1% gain across the board. The FTSE 100, DAX and even the CAC 40 enjoying some positivity. Of course, last week we saw a whole lot of market movement, particularly out in the United States, when it just came to the issues around hedge funds and what that actually means for the market. Hedge funds, unfortunately, taking a bit of a back seat. They had shorted a stock called GameStop. Now, to short a stock ultimately means you are betting on it to drop in value. But retail investors, essentially you and I, as opposed to just the big corporate investors, decided that actually they believe the price will go up. So they just kept on buying more and more and more. GameStop is now a $23 billion company, and indeed the price has gone up by around 13,000% should I say, actually, this in the month of January. So this year alone, it is absolutely astounding what has happened there. Whether that will continue to be the case, however, is going to be the big question mark, though. A few hedge funds losing a little bit of money. We'll unpack that a little bit as well then with our analysts in a moment or two. Up we go then for the JSE All Share, just above that 63,000 point mark is where we are, more than 1% gained so far in this picture. And that comes really because resources have gone up more than 2% today, pushed on by the platinum miners. They've gone up 2.5% at present, even though gold miners have gone down 2.5%. It wasn't enough to then outdo the other, unfortunately, on that front. While industrials have also picked up. A lot of that will pick up because the Chinese or the Asian market has gone a little bit higher then. So we're seeing industrials also edge higher indeed there. Financials, unfortunately, down because the banking stocks have also taken a bit of a tumble, with the listed property segment going into some negative territory too. As I've noted here, the platinum miners are the big gainers out in today's trading picture. And of course, with that being the case, Anglo Platinum becomes the biggest gainer so far in this afternoon trading picture. It's up more than 5%. In fact, at this point, it's now sitting at 1,596 Rand a share out on that front. Royal Bafokeng Platinum also going up 4.7%. So it's showing you again that the platinum mine is gaining a little bit of momentum and some demand. We're even getting word then from Goldman Sachs that we may be headed towards a super cycle when it comes to the commodities. Today then, all the commodities going a little bit higher as well, and this is key evidence. Then they believe that the likes of silver, iron ore could even gain around 25%. Even this picture could be completely different. We have seen gold touch $2,000 a fine ounce. It indeed could touch that figure again and some. You just don't know how far it could go. The platinum price going up more than 4% today. Real demand coming through. But a lot of this will be based on the efficacy of vaccines. And when markets begin to open up a little bit more, it means that demand for things like Brent crude oil, platinum and gold begins to pick up again. And ultimately, as they try to ramp up things like employment, production, manufacturing, delivery, all of that means that these prices could go a little bit higher. Will we benefit from that? We'll see. Today we certainly are. We're now at 15 Rand and 2 cents against the US dollar. For a euro, we'll set you back 18 Rand and 40 cents. And some positivity as well for the local currency against the British pound. We're at 20 Rand and 60 cents. Let's have a chat then to Bright Kumalo from Vestact Asset Management as we unpack this market picture a little bit more. Bright, thank you so much for the time. Could you see yourself as Vestact perhaps looking at the resources space a little bit more if there is indeed some sort of commodity super cycle on the way?
Yes. Arabile, nice to be on your show. But to answer your question, yes, when the second coming comes through, we'll definitely be buying shares in the commodity space.
Yeah, it becomes very interesting because Goldman Sachs sees that space sort of growing quite tremendously as well, right? 25% growth in the likes of iron ore as well by 2022. It's a good mark, but do you see that space being sustainable? I mean, the conversations at the likes of the mining indaba could potentially be very different as well, right?
Look, I mean, there's always a super cycle, about to happen and around the corner, right? And yes, it's very hard, to pick up, to time the bottom and obviously ride the wave, the super cycle, all the way to the top, and eventually, make money for clients, which is why we've basically stayed away from these super cyclical stocks, including mining. But if you had to ask me if there was a super cycle, coming, mining has still remained quite strong in the past 5 years. So I don't know if there will be a super cycle or what would trigger the super cycle. But we know that as different parts of the world are recovering from the coronavirus pandemic, one of the big pockets that many countries have actually saved up is infrastructure. So that they, like America, out of the 3 trillion of the stimulus, part of it is going to be about $350 billion is going to go to infrastructure spending, and obviously it should push the demand for some of these materials. But to how much, we don't know. But I don't see a big super cycle. Maybe a cycle, but I don't know about super in the cycle. Yes.
Yeah, we'll certainly see what actually happens in this market. Of course, we'll be right here for all of it. But very interestingly enough, what has happened of late is that hedge funds have certainly been in the news headlines, and they've struggled actually, particularly in the month of January, right? And they could even put up their worst quarter on record, maybe. Who knows? Depends on how things go, I suppose, for the rest of the quarter, just because of GameStop. Let's talk about why.
Yeah, I mean, so let's talk about last year in terms of, hedge fund performance. It's basically been their best year in about a space of 10 years. So basically since the financial crisis, this was, one of their best years by far. Also coming off not a low base, so a solid base. So they were up around, between 11 and 16%, whether, the S&P 500 was up around 16%. So it has been a good year for them, even though they underperformed the S&P 500. But now they've heard the worst January, especially if you had excess or if you were short, meme stocks or, companies like GameStop, BlackBerry, AMC, which is, the equivalent of Stake in a core offshore, in North America and those kinds of stocks, right? So you're seeing a lot of pain, so much so that the famous, Melvin Capital, which was, the one that was targeted by these, bless you, it was actually targeted by these, small men, Wall Street Bets, the subreddit there, they saw, their fortunes go down by 53% in January alone, notwithstanding that last year they were up 87%, making them one of the best performing hedge funds by far. They beat the benchmark, they beat, the S&P 500, they beat other hedge funds as a group. So it's sad to see them actually go down this much. But the bigger question around Melvin Capital or all the other hedge funds that have been short or betting against GameStop is, where do you cut your losses? What happened to risk management? Usually in most houses they say if your short is going against you and it's down 40%, it's probably a good time to cover your short and call it quits and don't even look back. But, most of these hedge funds are run by, very big egos. And as a result, it becomes very hard to make sensible, rational decisions when it comes to the investment process. Yeah. So
what's the best that could perhaps happen from here? I mean, how do you save a hedge fund at this point in time when you've perhaps bet 130% of GameStop shares were bet on shorts, right? So that just ultimately means that there's more of them expected to really
more
go
unwinding.
Down. They're really
Yes,
suffering.
Yes.
Yeah. So what happens from here? I mean, what's the best way out?
So I don't know about saving hedge funds. Those guys, they're ultra rich anyways. They probably don't need saving from us. But what they usually do, they would wind down that structure in that hedge fund because now they're way lower than, what they call their high watermark, meaning they'll have to outperform so much or make about 5 times, their current assets under management for them to earn their performance fee, which is how, they make most of their money. So they'll just close it down, wait 6 weeks and open a different structure with the same limited partners or investors, if you want to call it that, which is unfair. But at least now they start on a clean sheet, okay. And they can they can charge fees from the get-go. So it gives them a new sheet and a new slate, but obviously the bag holders in this in this case will be the limited partners or the initial investors in the old hedge fund. But this is how these guys play this game, unfortunately, and the small investors again are always the losers. But here in this case is I don't really know many small investors that are invested in hedge funds. It's usually rich people with $1 million and above to invest because they actually do due diligence in these funds. So whatever happens in the hedge fund space happens to rich people, so we shouldn't worry too much, you and me as the
we'll certainly see what happens in that space. As you said, they've stuck it to the man in many instances, and perhaps a change in how the market is meant to be viewed. If you live by the sword, unfortunately, in the market picture, you may even die by the sword too. Pride Kumalo, thank you so much for the time from Vestact Asset Management, joining us there to help unpack this market picture. More news after this. Stay tuned.